Good morning, everybody, and welcome to the Volatility Report. This is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to our Vol Report. Again, our blog from last night. Will this front term go? I think we're kind of waiting for one more Fed announcement, but the nose of VIX cash is lower, and this October has to go away. And I'm thinking maybe today's the day. If is, we will start to price. I think we'll try to price some more aggressive short vol plays in our chat today. Also, look for November 7th as our date. We will start posting it soon for our next Saturday class, fixing broken positions. Okay. So a trade on, you have something on, it blows up. What do you do? Okay. And maybe ways to help with the blow up prior to. So our risk management class got a lot of love, and so we will continue on that vein. So a couple of things. Treasuries rallying a little bit. The Fed will come out, say something, and I think the last 100 points or so, for whatever reason, we have had severe rallies in the past, and they have almost always been on they have almost all solely been related to like some sort of Fed window dressing. I mean, here we are 19, vol was higher, sentiment was kind of poor, and then I guess the jobs report was created more dovish condition. Like, the only thing I can think of is really moving the date 3 months or 4 months for a quarter 25 basis point move. Is that enough to just drive us? But apparently right now, yes, it is. So what's the funny thing is the market still wants to rally. There has been, for whatever reason, we have the big sell-off. Still, I don't think the reasons are quite known, besides the obvious one of more sellers than buyers. But stocks have been trying to get back to this level, and this is kind of, I guess, we'll just call it the stuck spot, right? We're kind of stuck here, and whether we start to go back to more highs, just kind of beat around here till the end of the year. Seems to be somewhat dependent on China, which opened up after their long break. But, it's off a little bit, not that much. At least the FXI marched way up, but the Chinese mainland market didn't move up enough, it looks like. So we sit and we wait. I don't expect much to happen until 2 o'clock again. We're still stuck on that same thing. And to the extent that the Fed says something, if they're more hawkish, I don't think the market does as well, because the last rally has been based on some more dovishness. That's the only thing I could think of. Or things in China really aren't that bad, right? I think big part of this was, maybe a recession or big pullback in China causes everything to fall apart. Since then, commodities have bottomed out and bounced a little. Oil bottomed out, bounced a little. The financials sold off, bounced a little. And I think that's where we are. So I think the thing that might move the most will be volatility, and most likely in the down direction. As far as stocks go, maybe we see another 0.5 or 1% move out of this, and then what? I think the one thing is if the Fed is dead set on raising, the market has not in general liked that, and that's when we kind of get down to this sort of, we're back to 1900, and everybody's sort of sad waiting for something to happen. Until earnings, which we start seeing Alcoa today. And just let's do one thing I want to do in the mornings, just a little bit, and we're going to start doing this in earnings season in our stocks to watch, is starting to price the earnings straddles and see how accurate they are. Right now, I don't think Alcoa's ever moved more than $1 on earnings. They're pricing around 80 cents. So we'll try to pick a marquee couple of earnings cycles and see how that works. Okay. Again, we rarely do earnings trades here because of the hit or miss nature of them, but there you have it. So right now we'll just say Alcoa is marking just around, what is that, 60. The strangle is 58 cents. And we'll see how they do, right? Because materials have been in the basement. And this obviously, Alcoa is a big, we'll see if all that demand for aluminum cars has really helped their bottom line or not. All right, with that, I don't expect a lot to happen till 2 after that. Let's just get an idea here again. Just pricing where the near the money is. You want to see what the market thinks? Go to the near the money strike. Okay, and we are pricing. We are pricing a little less than a 2% move, 1.75% between now and tomorrow. Right around a 19 vol. I think we easily see that happen one way or another. Give back some of the rally, or people get real excited again because the Fed sounds dovish. Okay, those generally been good for 1.5% to 2% over a 2-day period. So I'm going to call this straddle fairly priced. Let's see how right I am tomorrow. All right, everybody, you have a good day, and I will talk to you later.